Greetings, everyone. Your favorite cryptocurrency astrologer here, Cryptodamus, with a special guest today, Gianni De Poce. Am I saying it right?
Yeah, that's pretty
Gianni
good.
De Poce.
Poche, yeah, that's
Uh,
good.
he is Ray Merriman's, one of Ray Merriman's top students, disciples, and proteges. He's been studying with the famous legendary financial astrologer Ray Merriman for about 6-7 years. And he's going to give us a little overview of what he's looking at right now in the markets. He might be a little bit more bullish than I am, so he might have a little counterpoint. People have started calling me Crypto Doomus on Twitter, some of you may know, because of my mega bearish outlook on the markets recently. So maybe we'll get a little different views here from Gianni. We're going to kind of go over here a little Q4 overview for the markets in general, look at some of the important astrological configurations that are coming up and how we think they're going to affect markets. We'll look at some markets like the S&P 500, Bitcoin and Ethereum technical analysis, and look at some important price action and levels, things that we're looking for both on the bullish and the bearish side. We're at a kind of a key moment in the markets right now. The S&P 500, I think, is after that nice summer rally, has been down like, I don't know, 6 out of 8 weeks. But we're getting a nice little relief bounce this week so far. So the question is, we set a new low on Friday. Is the bottom now in? This is the $1 million question. Or, are we going to see new lows in 2022? Personally, I am of the opinion that we are going to see new lows in 2022. I have been telling people not to make any large cash allocations until we see the situation stabilize. Smaller dollar cost averaging, of course, is fine, but I'm holding off for now. I still have a majority cash position. This is not financial advice, by the way. So before we, before we introduce Gianni here, just want to say we're, some big events that are coming up is the CPI data for inflation. The closely watched CPI is coming out on October 11th. So that's going to shake up the markets. Is that right? October 11th, I think, is the next CPI.
Yeah,
and that's interesting because Mars is square Neptune that day. On the favorable side, we do actually have some favorables in October that I'm looking at. I like after that Mars is square to Neptune, which I don't like. I do like the series of some favorables. Venus, I think, Venus is going to trine Saturn on the 13th. Mars is going to trine the Sun on the 17th. Those are all favorable. Venus and Mars are going to trine on the 18th. So I like this series of trines. And then we get a beautiful Venus Cazimi with superpowers in its own domicile of Libra around the 20th through the 22nd. So I think we do see maybe some type of a rally around that Venus Cazimi period. However, after that, I think we go back into a shitstorm of really unfavorable, difficult aspects. We've got some eclipses coming up. Mars is going to go retrograde, and Jupiter's going to re-enter Pisces, which has been very unfavorable for cryptocurrencies. Also, we're heading into the third and final USA Pluto return at the end of December, which has been consistent with an economic crisis in the United States and really even across the world. The inflation is above 10% in the Eurozone, and the gas prices are skyrocketing in Europe, setting up a possible energy crisis. So a lot of really big concerns on the macro picture. Continuing throughout 2022. And I don't think Q4 is going to be really different. Not seeing the macro picture really changing. But the CPI will be a really big event. So Gianni's he's studying, I'm really well known for my work on cryptocurrency markets. Gianni is really working on broadly across many different markets, from equities to cryptocurrencies and commodities and treasuries. So he's very well versed in the global financial market scene. And he's going to tell us a little bit about what he's looking at right now. So Gianni, let me just turn this over to you. I'm going to give you some screen sharing in a second here, but why don't you tell us, tell us something while I'm doing that. Why don't you tell us some things that you're looking at right now as we head into quarter 4?
Absolutely. Well, the biggest thing on my radar right now, and but let me say before I get started, thanks for having me on, Robert. It's always a pleasure to be
Of
with
course.
you. But the biggest thing on our radar is the final passage of Saturn waning square Uranus. So we had a 4-degree orb of the waning square that actually accompanied the COVID crash low of March 2020. And then in 2021, we had 3 exact passages of that waning square aspect between Saturn and Uranus. And that really, I think, is the big macro driver of many of the investment themes we've seen over the last 2 years or so. Saturn, restricts, Uranus shocks between the supply chain crisis and inflation seemingly coming out of nowhere. I think that we forgot, as economic observers that there's a supply side to the equation as well, but that was a big driver. And so we had the all-time high registered in stocks in November in the Nasdaq, and then January in the S&P and Dow, and that corresponded to the final exact passage of Saturn waning square Uranus. But here we are now, with basically in the last week, I think we came within just under a 1 degree of that. I guess you would call it a 5th passage of that aspect. And we saw a pretty nice rebound from Friday's low. Now, Friday.
Well, we did see a new low though, as that aspect hit.
Correct. But the way that we look at these signatures in the MMA methodology is they're essentially, whenever you come into a time band when there's a lot of geocosmic aspects unfolding, it's like it opens a portal in time, so to speak, where the market is susceptible to a reversal. Now, this one was especially peculiar because last Friday, which would have been the 30th of September, not only was it the last trading day of the week, obviously, but it was the last trading day of the month and the quarter. We closed at the lows for all 3 of those, which is normally very bearish from a technical standpoint. But we know that Uranus is unpredictable and has a very strong tendency to break support or resistance. And it looked like we were having a break of support on Friday. Yeah. But in typical Uranian fashion, we're coming out of that, Mercury retrograde shadow period, or Mercury direct shadow period as well. It could have been a false breakdown. So that's essentially what I'm postulating now. And you're talking about CPI. That's a big thing. Obviously, the Fed's looking at. You mentioned that, Mars square Neptune aspect. But I think right now the Fed is also keeping a close eye on employment, because in economics, it's called the Taylor rule. Basically, when employment's high, they feel that they have justification to raise rates. But when employment starts to weaken, they tend to back off the rate hike trajectory, so to speak. So we had a pretty good jobs number today. We had a weak reading on Monday or Tuesday in terms of job openings. So there are some initial signs emerging that the labor market is weakening. I know companies like Facebook or Meta are freezing new hires. So, before we got on the recording, we were talking about the weakness in tech. And I think that's a very salient point, because when we look at the indices, the S&P 500 or what have you, stocks like Apple, Amazon, Meta, Netflix, Google, before that was called the FANG stocks. You don't hear much about those anymore, but those were the real drivers of the S&P 500's performance really in the last, 7 to 8 years. But those stocks have not done so well, with the exception of maybe Apple's held up better than the rest. So the market likes to discount future events. We had that COVID 2020 crash low in March within that 4-degree square aspect between Saturn and Uranus. We are definitely not out of the woods yet, but we just had that, almost exact passage, and we're seeing a nice rebound off of lows. So we're coming up against resistance in the S&P 38,900. If that clears, this could turn into something special. But I would say that if the world is ending, from a global financial standpoint, the Fed probably is going to pivot at some point, and the market could be discounting that possibility.
When do you think the Fed pivots? If you had to guess, this is the, obviously one of the most hotly debated points right now, especially on crypto Twitter. Do you have a sort of guess or prediction of when the Fed pivots?
Well, I'm kind of looking in terms of actually easing. So they're tightening now. I think what they would do is stop tightening and then ease. If they're actually going to start easing, I'm looking into like Q1, basically between March and May of 2023. And the reason behind that is we have 4 planets changing signs. We have Mars going into Cancer finally. We have Jupiter going into Taurus in May. We have Pluto going into Aquarius, and we have Saturn going into Pisces. So those are a lot of slower moving planets, with the exception of Mars, outer planets, changing signs. And a lot of times that corresponds to a change in the collective investment psychology, which leads to meaningful, policy reversals or pivots of the sort.
Yes. Well, I have I mean, I like your, your views on, and especially pointing out the Saturn-Uranus square.
Yeah.
Which I actually forgot to mention in my introduction, because we're I was looking ahead, but we're in that.
We're in it right now, basically. Yeah.
Right now. And by the way, I'll just say that my previous YouTube video was with legendary astrologer Rick Levine,
Nice.
talking about the Saturn-Uranus square and what it means, that it's not technically exact, and just going over all the different symbolism. By the way, he pointed out something very interesting, which is that Jupiter is making, like, I think a semi-square actually. So it's making a very unusual minor aspect pattern there. But from my point of view, see, the Saturn-Uranus period is often a period of reckless speculation.
Mm-hmm.
And so that, certainly in 2008, the Saturn-Uranus opposition actually heralded the crash of the real estate speculative bubble. So I'm really concerned that this final, not exact Saturn-Uranus square is possibly heralding, the end of the everything bubble.
Right.
So I'm definitely more pessimistic about it. That I think we are going to see a lot lower. Certainly, I'm sure you're aware of that. The S&P 500 is following the 2008 analog almost to the
I saw that.
And certainly that predicts that we would be going down to like 3,200 in Q4. So as long as that holds, that's a possibility. Of course, those analogs, can sometimes break at any time. But go ahead and whatever, if you want to look at some price charts, or
I got the S&P up here. I can share my screen. So you can see my screen, Robert?
Yeah.
Okay, so S&P 500 here. These are, I'll highlight the lows with that Saturn-Uranus square. So this was that 4-degree square orb that happened in March of 2020. And then we had the all-time high here registered at that right after that final passage in December. And here we are now. And as a technical analyst too, Robert, I'm sure you can appreciate, we had this nice case of bullish divergence in price from the RSI indicator here, usually an indication that downside momentum is waning and often precedes a reversal. Now, we also gapped up this week too. And so if we can close near the highs of the week, that is a good sign. Although I will point out that a similar, I wanted to circle there, a similar, price maneuver happened at the lows in June, and that didn't hold up. But I will point out another potential bullish catalyst that we're seeing across the equity indices here. And it has to do with the NASDAQ, because the NASDAQ, I'm actually going to zoom in on the daily chart here. The NASDAQ in the financial community is viewed as that's where retail goes to speculate. The S&P 500 is where the institutions like to speculate, and the Dow Jones is kind of where the large institutions just want to park money. So whenever you're seeing the NASDAQ lead, either to the upside or downside, a lot of times that's an important cue as to the market's direction. But we'll note here that in the NASDAQ cash index, we actually did not take out that low from June. We closed at a new low, but the intraday low from June held. That was not the case in the S&P and the Dow. So whenever we see those types of divergences in price between the indices, it can be a signal that a meaningful reversal is in the works. So again, we're not out of the woods yet, but we've been talking about tech, and there's been so much speculation in the tech sphere, especially with Saturn, being in Aquarius right now. Tech has underperformed. We had a shortage of chips, and now it's turning into a glut of chips. So Saturn, can cause issues with supply as well, issues with demand. A lot of times we look at Jupiter and Saturn respectively for those. But tech has had a pretty rough go as Saturn has gone through Aquarius. So I think that probably will persist at least until we get to the Saturn going direct, which is the 23rd of October. Basically, I want to see Saturn get into the later degrees of Aquarius, get into the early stages of the early degrees of Pisces. And if Saturn is going to lower demand, in whatever sign it's transiting, I would actually look for perhaps crude oil to experience at least a slowing down in its rate of ascent when Saturn is in Pisces. But until then, I think we're going to see tech continue to underperform. But it is a pretty good sign, long story short, to summarize what I was just talking about, is the fact that the NASDAQ didn't make a new low. And then with Saturn going direct on the 23rd later this month, that's a pretty good sign, I think, for the risk on, risk off metrics of the equity market.
Interesting.
Yeah.
What are you saying for crypto right now?
Well, you want to do Bitcoin or Ethereum first?
Bitcoin. Let's go. Let's
Okay.
go with Bitcoin. Yeah.
So from a technical standpoint, Bitcoin is due for a 4-year cycle low. And that's measured from that December 2018 low. So we are really in that time band for a low to happen anytime. From a technical standpoint, this pattern that we have here is called an inverted saucer. And this projects prices down into the $10,000 to $12,000 area, which is what we've been. I know you've been having that same price objective for many months now too, as well. So I think that if Bitcoin hits $10,000 to $12,000, that's a low that we want to buy and start to accumulate long-term positions. Now, what would change my mind on that? Well, if you start to close above basically this high from mid-August, if Bitcoin starts getting above, 25,000, I think, that kind of changes the plot, so to speak. But I really would like to see, you were talking about the, how we had that big real estate collapse when we had that Saturn-Uranus opposition in 2008. Perhaps this square has to do with the crypto collapse, because that really did fuel the retail speculative bubble in the last few years. Was crypto, was people basically getting into markets to trade crypto. Now, I sound a little bit more
NFTs. Talk about a speculative bubble.
Yeah, NFTs, exactly. I sound a little bit more bullish on stocks than I am on crypto. And the reason behind that is that when crypto fell into its last 4-year low in December 2018, stocks actually continued higher in between that time band. So there is historical precedent for the correlation between stocks and crypto to basically break. And that's not been the case year to date. They've been positively correlated to the downside. But I would be keen on seeing that break, if crypto is going to form a new low. But, we're definitely not out of the woods in stocks. So even though I'm not as pessimistic on stocks as I'm on crypto right now, we're definitely not out of the woods yet, but there is a path from a geocosmic standpoint for a low to form here in the equity market. So what is your take on Bitcoin right now, Robert?
You can give me back the screen sharing on the host thing. I'll throw up my Bitcoin chart too. But I pretty much agree with you, because, and here's why I think that crypto and equities will diverge, unfortunately, because I'm a crypto guy. I mean, I'm a crypto believer, but I gotta also be based in reality. So what I think is the big risk overhang, additional macro risk overhang for crypto that isn't for equities, is this government regulation issues.
Yes.
And as we know, like the Biden administration and Gary Gensler, the SEC chair, have been just a lot of stuff about regulation coming. And we've been talking to some contacts in the crypto community. And what I've heard also backs that up, that we are going to see. Let me see here. Oh, I was just looking at gold earlier today, so I have that gold chart up. But that backs up astrologically what I'm seeing as well, and I'll get into that a little bit later, because you might remember from my talk at ESAR that I talked a lot about March 2023 being a really crucial, unfavorable period for crypto, and that's where I think we're going to see a lot of government regulations coming in Q1 of next year. So okay, let me get to my regular daily chart here. Yeah, so Bitcoin did make a new daily low in September. It didn't hit the intraday 2022 yearly low, which was 17.5. Let me just throw up a slightly different chart here. I mean, you've got a kind of a downward channel going here. You know, I mean, my hunch has been that this kind of 19,000 support level
Hmm.
is kind of like that 6,000 support level in 2018.
Yeah.
Which broke down and had a 50% breakdown, you know, with the ultimate bottom coming in just above 3,000. So a 50% move from here takes you down into that $10,000 range that you're talking about. Now, if like you said, you know, if, first of all, I mean, just first of all, you know, Bitcoin would have to get above 22.3
Yeah.
just to even make a higher high on the 4 hour. Like
Right.
it would have to break, you know, oh, sorry, I mean, actually, even before that, let's just look, you know, just on the daily chart, some just basic, the really next resistance is 20,800. Can we even get up to 20,800 and test
Yeah.
this kind of confluence here? You've got the downtrend line and you've got a horizontal resistance level. That was the previous support. So first of all, can we even get above that? Then you have to make a new high above 22.3, 22.4. Okay, then maybe, okay, you know, there's still going to be actually a lower high though. That's at that 25,000 level, 24.5 that you're talking about. Yeah. So if you see crypto starting to make new highs above 24.4 here on the daily, then something's changing, right?
Yeah.
The dynamic has changed as you've broken out of this 3-month-long doldrum of basically a sideways with some fake out breakouts. Above 20, 24, above 25, that means, yeah, something is changing. And frankly, I just don't see it. With this macro risk off picture, the Fed probably going to make another big raise. You know, I mean, okay, let's see what the CPI shows. You know, if CPI comes down a bit, you know, you could see a little rally in crypto here. As I said, you know, I think there is potential for a favorable period in mid-October around some of these favorable aspects. Lower CPI number, you know, the markets are looking for anything to get excited about, right? Like even just a whisper of the Fed pivot and you see, you know, you see these kind of rebound rallies. So now let me just go to the weekly chart, you know, that I've been looking at. I've got a whole bunch of different setups here on my TradingView account. Obviously, we got a lot of different things I'm looking at. Yeah, you know, 19.5 is really this key level right now. Because it goes back to this all-time high, you know, from 2018, which is now flipped into the support level. And, you know, you've gotten a couple of wicks down, you even got to close below it, but it fought its way back up above it. So you've also got this, also going back to, you know, what your four-year cycle low of December 2018, you've actually got a trend line here on the logarithmic scale. That also includes that March 2020, and that's down around 16 right now. So that's a technical level that I'm really looking at for the next kind of, you know, sideways stall out if that 19.5 breaks. Now, the other really important technical level for Bitcoin is the 200-week moving average. Bitcoin has really never been below the 200-week MA. Which is right now about 23.5. So this time, first of all, is different for Bitcoin, technically speaking. Now, if Bitcoin can get back above that 200-week MA at 23.5, that would be good. You know, that would start to get some bullish kind of sentiment maybe going. But of course, it would have to hold as a support because you had a breakout above it here. But it basically failed on the first retest. So not only does this, you know, really key point for traders, not only does it have to break out above that level, it actually has to hold it as support. You don't want to FOMO into that until you see it hold as support. And of course, it got rejected on the recent try to break above it. So those are the technicals, you know, you know, and then down here, of course, yeah, I've got these kind of old highs, which is around 11.5, which hopefully would provide a nice support. I don't want to see 10. I don't, you know, I tweeted this last week. I said, to me, the big question isn't whether the 17.5 to 2022 low holds. It's whether 10,000 holds as a macro high or low.
Yeah.
You don't want to see, if 10,000 breaks down, you've got a really destroyed market.
Right.
And confidence isn't going to come back for a very, very long time. So I want to see, I do like buying, I do like what you said about buying the $10,000 level, but I don't want 10,000 to break. People are, oh, it's just cheap Bitcoin. Well, I don't want it to get that cheap, because that has really, I think, long-term implications for the market.
Well, you make, I'm really glad you mentioned that, Robert, because one of the studies that we love to use that has really been impacting crypto is, and this is well known in the astrology world, is Uranus transiting through Taurus has been, a major catalyst behind the boom bust cycle in crypto. But, we can look back at previous examples of Uranus transiting through signs and the impact it had after the boom and the subsequent bust. So if we go to and look at when Uranus was transiting through Aries, you can go look at stocks like Boeing. Boeing was a really hot stock in the mid 2010s. Has still had not recovered from that high previously. And I mentioned Boeing because Aries is defense, military stuff. So we saw a boom bust there. When you go and look at when it was in Pisces, you had the big boom bust in crude oil. And that all-time high was in 2008. And here we are, 14 years later, and crude oil still has not taken out its all-time high from 2008. You go back before that and you look at when Uranus was in Aquarius, you had the boom bust, the dot-com bubble, and it took the NASDAQ almost, 14 years to make a new all-time high again. So that is, I think, the big risk when it comes to Bitcoin. As you mentioned, if that $10,000 level doesn't hold, I think that scenario with respect to Uranus transiting Taurus becomes a much higher possibility.
Yeah, well, that's an interesting point. So basically what you're saying is that Uranus transiting the first half of the sign is the boom, and then the second half of the sign is the bust.
It's actually like the last 10 degrees, the last decade is usually
the last 10 degrees. Okay.
Yeah.
All right.
Yeah.
I mean, well, that makes sense, except that, of course, you have the Bitcoin halving event in 2024, which is a macro bullish factor for cryptocurrencies, and has also, historically been one of the drivers of crypto bull markets.
Yeah.
So I wouldn't discount that too much. 2024, I think, is when we really see, a bull market turnaround for crypto. But it'll be interesting to see what happens. I do think this government regulations for crypto are going to be a big risk overhang. And that's why I'm not DCAing now. I'm not allocating any cash to crypto. I think there's definitely more downside. I just wanted to turn to my S&P 500 chart really quick here. We bounced right off the 200 week, which obviously did not hold up for Bitcoin, as we just showed. But for the S&P 500, that was obviously a nice logical place for the rally. And certainly we do see this nice bull div forming on the S&P 500 weekly. So that's not something you want to ignore.
Right.
However, I mean, my bias has been and continues to be that we will see the pre-pandemic high of 33.85 tested as a support before this bear market is over. And I don't know exactly when that will be, but I think we will see that level. That's a really natural level, I think, to see tested as a support there.
Yeah.
So that's kind of where I would be. That's where I would be allocating some larger cash. Now, whether that holds up or not, that's another story there. I mean, some people are saying it's going to go down even to 3,000. Do you have an idea? Any ideas about? Do you have any strong feelings about that?
No, I think that basically, if we're not bottoming here, I think that's a likely outcome.
Yeah, I mean, you got lower high, lower high. You did get a higher high here, sort of. I mean, it was in the shorter term trend, it was a higher high, but basically lower high, lower lows, lower low, lower low, lower low. So we're in a downtrend still. We're in lower lows and lower highs. So until that changes, people have asked me what would turn me bullish. Well, let me go into my daily chart. I think that I would turn more bullish if the S&P 500 broke out above this confluence of the 200-day moving average and this downtrend line from January. Before that, anything below that is just another lower high. that could potentially turn into another lower low. So I'm really cautious. I'm really risk averse. And based on the astrology of the USA Pluto return in December, the eclipse seasons, Mars retrograde, Jupiter going back into Pisces, I'm very risk averse, and I'm playing it really cautious with my cash right now. I just wanted to point out one other thing here. I posted this is my monthly report. If you're not subscribed to my Patreon, this is from Michael Kramer, Michael Mock Capital on Twitter, but I'm borrowing his chart here. But this is the analog in the S&P 500 now with the 2008 financial crisis, and the price action is very similar, and that does tend to indicate that we will test that pre-pandemic level as a support level in Q4 actually. I think that would be sometime in October or November before we would get a bigger bounce there. So if that continues to play out, then we are going to make new lows, of course, but that is a big if. But that's been pretty interesting because it just shows you how human behavior is so similar. In these times of financial crisis and economic difficulties, markets tend to mimic earlier periods. So it's very interesting. There's still a lot of difficult astrological things to consider, and so I think it pays to be prudent. Do you see anything astrologically, aside from what you've already talked about in the Uranus Saturn squares, do you see anything really favorable, really hopeful, optimistic for markets, in the next, in Q4 or Q1 of 2023?
Well, I do think that Jupiter going through Taurus will be bullish. So that's in May of 2023.
Okay. So that's a ways out.
Yeah.
That's still more than 6
then,
months away. So
yeah.
in the more short term, what do you see anything that is for the bulls to really take, anything really bullish?
Yeah, aside from buying when there's blood in the streets, no, it's from an astrological standpoint, there really isn't that much good, but a lot of times you do see the market turn a little bit before those transits happen. It's like, we call it the central time band in MMA methodology. So when you have the exact aspects, say you have like 3 to 5 of them, between the 1st and the 3rd or the 5th is the central time band. But a lot of times you see the actual turning points, a couple weeks before that central time band or afterwards. We call it the extended time band. But I do think we were talking about this before as well. I do think the dollar holds the key to the entire financial market right now because, pretty much.
Go ahead. I'm going to throw that chart.
Yeah. Yeah, and actually I saw it in that article, which reminded me of it. But the dollar's been a global wrecking ball, and the reason I think that a potential, Fed pivot is not totally out of the works yet is that we've already seen the Bank of England and the Bank of Japan step in and intervene in their markets directly. So I know to a pretty high degree of likelihood that the central bank's getting calls from around the world like, hey, can you please slow down the rate hikes because it's sucking all the capital out of our countries and taking it on to the United States. So if you even look back at the COVID low in stocks of 2020, the US dollar made a high, and then it went down for basically a year and 2 months between March 2020 and until May 2021. In that, a lot of times you'll see big rallies start in stocks when the dollar comes down from its high. So the dollar's been a racehorse, and kind of it's one of those things that now that it has everyone's attention, I think that we could see a prolonged period of consolidation, especially now, we're seeing the European Central Bank finally start to raise rates. But the Bank of England is back to doing QE again. So It's one of those things like, what happens if the Fed is still tightening and then Europe is doing QE again? That's why I think that we could at least see a pause, in the rate hikes. Oh, market just closed, but
awesome, dude.
Yeah. I think this is the key to the equity markets is seeing the dollar pause its rally. And I think that, the Fed just watching the job numbers and the CPI, I wouldn't be surprised. I mean, CPI peaked the actual numbers for the US in June, which was around the time we had Saturn and Neptune go retrograde. Interestingly, Neptune so much has to do with inflation and hysteria, and there was a lot of inflation hysteria in June. And Saturn rules our perception of reality. And now, we've had this tremendous decline in oil prices and a lot of other commodity markets. So I think there is a pathway for CPI to continue, at least not making new highs, at least flatline for a while.
Mhm.
But the problem with CPI is that it's a lagging indicator, right? So we're always reporting on CPI from the previous month. So like we have CPI next week, that's going to be for September. That's why I like to look at the commodity markets even more so. But I do think that, if the dollar did make a high there last week, we could look for a prolonged, consolidation that I think could turn into a significant tailwind for risk assets like, crypto or even stocks in time. I'm more bullish on stocks, but like I said, I'm definitely not out of the woods yet. But the dollar holds the key, and it all has to do with interest rates and the monetary policy and all that kind of stuff. So this is often an overlooked signature with the dollar, as we were talking about Uranus going through Taurus as it pertains to crypto, but Taurus also rules currencies. What's the world reserve currency? Is the US dollar. This is a Uranus style rally. Like that's a tremendous boom. So as we get into the latter degrees of Taurus, will we finally get that strong dollar decline, around 2025, let's say between 2024, 2026. And there are some cycles that line up for a low in the dollar then too. So that was an overlooked aspect of Uranus going through Taurus. All we've heard for the last 10 years, Robert, is that the dollar's about to collapse, but that's the exact opposite's happened.
Interesting. Well, for some of our viewers who may not be, familiar with DXY, the US dollar currency index is essentially it's a safe haven, right? The US dollar is a safe haven. So when the US dollar is soaring like it is, it means that traders and investors all over the world are buying dollar-denominated U.S. treasuries and also hiding out in U.S. dollar cash. So it's a fear gauge to some degree. It's a risk on, risk off. When the dollar is in a parabolic rally, it's a risk off indicator. It's a safe haven. It means there's a lot of fear out there. So that's why crypto and risk on assets like tech stocks are not, are trade inversely to the US dollar. So I just wanted to, make that point for people who might not understand that dynamic. But yeah, I mean, we broke, we broke this 20-year resistance, on the weekly chart, right? I mean, you've got, I think the really strong technical resistance is that previous high from 20 years ago, which is around 120.
Yep.
So as we were talking about at ESAR, and we can't rule out a move up to 120. So there could still be room for the dollar to go higher. I mean, I just want to say it's possible. And if that is the case, then crypto and equities will continue to suffer very, very badly. So for the dollar to come down, somehow macro conditions would have to shift. Inflation will have to come down, and the Fed would have to start to ease policy or at least stop tightening policy, as you mentioned. So now, CPI is coming out on the 11th. We've got three aspects around that time. Sun is trine Saturn, which is actually favorable, indicates could be more stabilizing the CPI.
Yeah.
Mars is square Neptune, though, which is really very low confidence, kind of discouraged sentiment.
Yeah.
And then later on that after midnight, the next day, you've got Mercury is opposing Jupiter, and that often brings exaggerated responses in markets. So it's a complicated mix that's hard to predict. I'm not going to say exactly how that's going to play out, but it will be interesting to watch. To me, what's more concerning is that Fed meeting on November 2nd. This is the big debate in economic circles right now: is the Fed going to do more damage by raising rates now, or by easing off too early? Right. I think you could say that basically the debate is into those two camps right now. The one camp that if they continue raising rates any higher, it's actually going to cause an economic crisis in and of itself. bring on a recession, and the dollar could go higher, crashing global currencies. I mean, but however, there's the other people who say, well, they're behind the curve on inflation. They didn't realize inflation early enough, and now they can't take their eye off of it. They can't take their foot off the brakes yet. And certainly they've been signaling that they will continue to raise rates. So the next Fed meeting is on November 2nd, the Federal Open Market Committee. And that has a very bad signature. That has Venus, it's in between the two eclipses. Mars has just gone retrograde. Jupiter's just re-entered Pisces. And that day on November 2nd, Venus is debilitated in the sign of Scorpio and conjunct and afflicted by the South Node, which indicates loss. And Venus is a wealth planet. So this is and then Venus, so let me see, the Venus in Scorpio, and then Venus is going to oppose Uranus and then square Saturn a couple of days later. So if I had to make a prediction, I'm going to say the Fed is going to raise rates, and it is going to cause a recession, and it is going to knock markets down again. So that's kind of where I stand. I continue to be bearish, and that's why I'm mostly continuing to hold cash. So I'm essentially, I'm a US dollar guy. I'm sitting in cash. Do you have any comments, predictions, or forecasts on this?
Well, I think that those eclipses that we're approaching, we have the solar eclipse on the 25th in Scorpio, and then the lunar eclipse. We were chatting a little bit about that lunar eclipse. We're going to have the moon conjunct Uranus there. It's also going to be in a T-square with Saturn at the time. So Scorpio rules debt. Debt is treasuries. Debt is the foundation of the global monetary system. Every unit of USD that's created is a new unit of debt. So this is going to sound crazy. That might be the last Fed rate hike, or maybe that is the last 75 basis point rate hike that the Fed does right now. That's what the market expects. Yeah. And then even if I think right now the market's so desperate for good news that if the Fed starts to decrease the pace of rate hikes, that could be a potential, catalyst for the dollar to, continue its, brief pullback here and head lower, which I think has to do. It all has to do with interest rates, and the interest rates are just too high in the U.S. compared to the rest of the world, and that's weighing on stocks and crypto and other risk assets. So I think that election day, a lunar eclipse that could be, with the T-square with Saturn, foundation rattling of the sort. And when it's with Scorpio, it's gonna impact the debt markets, I think, pretty significantly.
Interesting.
Yeah.
And I just wanted to make a comment on what you said about the Bank of England.
Oh yeah.
I think that's a completely different situation because that was like this new prime minister, what's her name, Truss?
Yeah.
Stepping in doggy doo-doo the minute she got into office with this plan to lower taxes on the wealthiest earners. And the markets punished her immediately with a collapse in the pound and the bond market. So I think that had a lot more to do with this kind of internal political dynamics in Great Britain. And that did create an unusual situation where the Bank of England is raising rates and yet started buying bonds, which some commentators on Twitter liken to a monetary speedball. A very confusing situation, right? So I think the situation in England is not comparable because they started that QE. I don't think that really. I don't think that that's comparable to the U.S. situation. And another thing that I wanted to remind our viewers is that in addition to raising rates, the Fed is also actually selling the quantitative tightening.
Yeah.
Which isn't, getting as many headlines. I have a chart right here where you see that, they're selling 100 billion, or selling, they're letting them expire. They're not actively selling, but the effect is reducing liquidity in markets. And people need to also take into account this new quantitative tightening. Nobody's ever done this before. Quantitative easing was this crazy experiment that started in the financial crisis of 2008. They doubled down on the pandemic financial crisis, as you can see from this chart. And now it's like, there's no playbook for this. And nobody really knows how this is going to affect markets, but it's probably not good. I mean, look, the markets have been addicted to QE. The Fed has juiced up financial markets for a decade now, and that's coming to an end. I mean, they've got to reduce this thing. It's gotten to $9 trillion. So I'm really concerned that this is another really bearish macroeconomic factor of reducing 100 billion a month. So even if they pivot on rates, we also have to watch what they're doing with this with their balance sheet. Just another factor to be concerned about. And I think that's, the effect is basically sucking liquidity from global markets. So that's why I think that this bear market is really going to continue at least through the end of 2022.
Yeah. Well, I was gonna say you raised a couple really key points there. Especially with the Bank of England, they had to pivot because their pension funds were on the precipice of going under. And, we have a big pension crisis in the United States as well. Various states and, private pension funds are basically insolvent. And this is the Pluto return. And what happened, you mentioned quantitative easing started in 2008. That was Pluto going into Capricorn. We're coming out of that now.
Yeah, I mentioned that when I was on your YouTube channel.
Yeah. So that's very important. Now, I'm going to draw another historical parallel. It's the 1940s when the Federal Reserve was bankrolling the United States war effort. They basically implemented, they did QE to an extent, but what they did is they capped the long-term rates. So right now we've seen, long-term interest rates skyrocket. That's why the 30-year mortgage is over 7% now, right? But what they did in the 1940s, which I think is a possibility now as well going forward, even as inflation continues to, remain at elevated levels, is I could see the Fed stepping in and saying, okay, we're not going to let the 30-year bond go above 5 or 6%. And they could do that to provide essentially a ceiling and allow, the market to readjust to, what was 14, 15 years of interest rates at zero. So, and they have to do that to save the pension funds, because the pension funds, these were retirement plans that were really popular in the 1980s. And the actuaries, the math whizzes that created these funds never accounted for interest rates being at 0% for 15 years. And when they created these pension funds, there are rules that say you have to invest, let's say 70% of the fund's assets in fixed income or bonds. Well, if you made the assumption that the bonds were paying 7% and instead they paid 2%, you can see how that 5% difference, how do you make it up? So I think that's the big crisis from a financial standpoint. It all comes down to Pluto. A lot of these pension funds have guarantees from the government, whether it's the insurance funds. Insurance is a Pluto aspect too. So that it all comes down to Pluto, and I think we're going to see the climax of it by Q1 of next year. But the reason I'm open to a Fed pivot is I think it's extremely unlikely they're just going to sit by idly and just let it happen. They've intervened before. They're just going to intervene differently this time, I think. And I think that the historical precedent is the 1940s.
Interesting point.
Which, by the way, that was the Uranus return too. I forgot I was going to add that. That was USA's last Uranus return, and we're coming up to that in a couple of years as well.
Interesting. Yeah, those are definitely not things that I've been looking at, the pension fund issue. So thanks for bringing that, into our awareness there. That's it. That's really interesting. We're seeing a lot of things we haven't seen in a long time, right? We're seeing really unusual economic circumstances. I mean, the dollar's at a 20-year high. Inflation's at a 40-year high.
Yeah.
We're seeing, price action in the stock markets we haven't seen in 50 years. The S&P was down like 10 out of 11 weeks at one point. We're seeing some pretty weird stuff, and I don't think anybody really knows how this is going to play out, because a once in 100-year pandemic, quantitative easing, nobody's ever, the Fed has never done a $9 trillion balance sheet before, so we don't know how they get out of that. There's a lot of very unusual circumstances that have been created over the past decade, and especially with the pandemic. So, we looked at the planets, try to get some wisdom and some guidance here to try to get more insight into what's going on. But even then, we don't always know what's going to happen either. So
Right.
that's why I invite people like Gianni who are also studying this and maybe looking at different things than I am. And we try to get a bigger picture of the world through astrology and looking at markets. So I think we've covered a lot of ground today. We didn't get into, we just really looked at the Q4 here, but we'll have you back on next year, and we'll look at some of these factors of the Pluto and Aquarius and some of these things that really, I think even astrologers have no idea
Right.
what they mean, because Pluto hasn't been in Aquarius since the late 1700s. And of course, that
Right.
was the American and French Revolution, but we don't know what that's going to do this time around. So there's a lot of uncertainty moving ahead with that, especially with that ingress. Gianni, tell us about if you have any big seminars, or where we can find you on
Yeah.
social media, if you have any educational programs coming up or events.
Yeah, absolutely. So MMAcycles.com is the mothership. We just completed a 2-year trading academy course with students from all over the world. We're going to be launching that again in the spring of 2023. So you can find the details shortly at www.mmacycles.com. I do a weekly YouTube video. Robert's been a guest on it as well. That's Merriman Market Analyst on YouTube. So we do weekly market updates. We have, special guests on periodically. Ray joins about once a month. And my personal Twitter handle is Gianni_De Poce. So pretty easy to remember. Ray's is just MMA Cycles. So that's the easiest way to stay in touch with us. And we have a plethora of reports that we publish on a periodic basis through MMA Cycles. A lot of our work centers around the futures market, but a lot of people don't trade futures. So we recently launched an ETF report that I author. I'm the editor of, and we have, the flagship report that Ray's been publishing for over 40 years, the monthly cycles report, where, we analyze the Dow, bonds, crude oil, precious metals, the euro, kind of the whole financial landscape. So we stay busy, no doubt about it. I think that we have plans to do a webinar by the end of the year. It'll probably be Ray and myself, and I think a couple of our top students from the most recent course. So definitely stay tuned to that. And the easiest way to do so is just go on our website and sign up for our free weekly column. So yeah, that's pretty much it. Thanks again for having me on.
At the very least, getting Ray Merriman's weekly.
Yes, it's a very good
weekly report. It's always very informative.
Yeah.
And awesome. Well, Ray Merriman is one of the great financial astrologers of our time, and you're very privileged to be able to study with him. Please say hello to Ray for me personally.
I sure will.
And I also, as many of you know, you can find me at Astro Crypto Guru on Twitter. And I have a seminar coming up here, actually. Whoops, let me go to my profile here. And I've got a Q4 analysis this Friday. Actually, you can go to my Twitter. It's the pinned tweet here. And we're going to look at Bitcoin, altcoin forecast, stock market. When does this bear market end? What are the factors we're looking at for Q4? We're going to go really into detail on some of this stuff this Friday at 10 a.m. Pacific time. It's $95, and you can register through my online store here on Twitter. Also, check out my webpage. If you like this information, check out my website, astrocryptoreport.com. And on Patreon, I put out a twice weekly market update and a longer monthly report that we just looked at a little bit earlier in the video today. So check out all that stuff. And we've got an action-packed next couple of months astrologically. So it's going to be a fascinating time, especially with this eclipse on the USA election day, which we'll have to do a special YouTube video for that one. It'll be a very dramatic election in the US midterm this year. Gianni, great to see you again. We connected at the astrology conference, ESAR, and it's great to have you on the program. Thanks for your views and your expertise. And hopefully we'll have you back again next year.
Thanks, Robert. It's my pleasure. Thanks for having me on.
All right, everybody. Have a great day and good luck and trade safe. Okay. let me just end this recording here. Whoops. Okay.